Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
Take the bottom headline first. We are seeing a discussion around the price of cars. That typical new car in the US has now broken a $50,000 barrier, with car payments now averaging more than $750 a month. This is at a level that would tend to rival at least a significant portion of rent or mortgage payments for consumers. So cars, that to me is an indication that we are going to see defaults. $750 a month on car simply wouldn't be, and on a depreciating asset would not seem to be a sustainable number, with 100-month car loans now increasingly the norm. If we have car loans being extended over the course of 8 years, what will that say about the ability to both maintain these relatively high payments, as well as whether this will simply be sustainable in terms of pricing? So I think a very strong indicator that the consumer is under strain with those figures. Also, another headline regarding the takeover of Janus Henderson, $7.4 billion. This has been a continuing trend of take privates of, we can see the asset management industry has been taken private. There's still a strong belief in certain segments of the asset management industry, not every segment, not every equity, for example, not every active equity manager is seen as having a sustainable business, but equally there is a strong indication that asset management itself has gems of essentially diamonds in the rough that are still very interesting candidates. So I'd say a very interesting trend when it comes to manufacturing M&A. We're also seeing a suggestion that subscription overload is exhausting Americans. And we've had a lot of coverage of the battle for Warner Brothers between Paramount and Netflix, and suggestion that this, if price competition for subscription and initial price cuts go away, that this will simply become an unsustainable business model for streaming. Most Americans are weary with having multiple subscriptions. We know there is an interest in certainly reducing the number of tokenization and the number of subscriptions that they have. So this is another indication of the consumer under some pressure.